Hey, everybody. Sorry for the delay. I was actually just running along from another session. I didn't realize how quickly time had gone. Yeah, we've got a little prep to do. Markets opening up in about 22 minutes. Let's see what we have in store for the day. Chat's open for everybody. Thanks for coming in. Hope all's well. All right, what's happening, Greg? Stephanie's here. Fabian's here. What's up, Russ? Just got teeth cleaned, huh? Walter here. Hey, Bob. Aggie, good morning. Jeff, good morning. I saw that P. I was actually that's actually what I just started talking about in my previous session. Look at this thing. Expect a move for Dell. 11.17% is the average earnings move, and it's up 30+% after market, after earnings, 33%. Do you remember the bonus trade I talked about? It's still not filled, but I'm looking at a $12 to $13 credit. I don't think it's going to get filled with 20 days left. But I'm still going to take that trade and take that calculated bet. Do I? And again, it may be absolutely stupid to call this top, but that is a ridiculous move. This puts Dell up over 270% from the February lows. What is annoying is how close I was. It doesn't freaking matter because it's not a trade. But I was like, well, as soon as we got the quantum computing bid, I was thinking, could I just buy a call, sell a call against it, and collect the income and do it for like 30 days. Well, I mean, sure, that would have been great, but I would have capped it. I know I would have capped it. If I did a diagonal spread where I buy the call and sell it, I would have probably capped myself for like a $500 to $1,000 upside, and this thing would have been freaking ripping for. I mean, it's up $100, man, $100. So that expensive call option, because we had like 100 and some Ivy rank, that $100 would be, still doing pretty well, despite definitely overpaying for options. But I'm curious if this trade works out. If it gets filled for a super high credit, I'm only risking like $200, $300 on the trade. Okay, another thing. Talked about this morning. Let's look at the weekly candles. I actually walked back on my chart to find out how many times in the S&P. My chart's a little messier. It's mostly the alerts. I can see through all the other noise. Let's go to the SPY for a second. Actually, let's go there. A little bit cleaner. Let's go back in time. Let's take a little trip down memory lane. When's the last time that the SPX has had 9 consecutive candles bullish? Does anybody know? Maybe you read it, but give the answer. I've got 2 years in my head because I went and found them this morning, and they're recent. Recent. Anybody know? When's the last time we had 9 consecutive weeks in a row? More importantly is, how did they happen and what happened after? Okay. All right. So I'll tell you. This was a 10% correction to a 20% rally, 9 weeks in a row. So this, unless we fail miserably today, we are going to close for a 9th consecutive week. No, Gloria, not 9 days, 9 weeks. 9 weeks. We had a 12 and 13-day win streak in the Nasdaq. We had like I think it was 11 for 12 days in the S&P, and it was like 13 days in a row to the Nasdaq. That happened in this rally as well. So we had like one of the strongest rallies since like 1950. We had another 9 weeks of bullishness, and if, like I said, if we stretch a little bit higher today, but okay, 9 weeks. So let's go back and find out another 9 weeks. The last time it happened was 2023 after a summer correction. It was right in here. We had a summer correction of about 10%. There's a 10% correction, almost 11% correction. And we proceeded to have 1, 2, 3, 4, 5, 6, 7, 8, 9 closes higher. And then we had a pause, and then we had another rip. But at that 10th week, we did dip. So we had at the top of the 9th week, we had highs here. We did fade into that final week. We had a sell-off by about 2.5%, and the market picked it right back up. Okay. Now that was, that was a big rally off of the lows in 2023. Keep in mind, this is coming off of a pretty sizable bear market of 10 months in 2022. So that little correction here was really just a baseline like head and shoulders trough. So that rally overall was 20+%. Another pullback. We got into 2024. Had our April pullback, had our August pullback, had our holiday pullback. But that's a pretty severe rally from October 2023 into March, April 2024. So we went up about 29%, pulled back 20. So that pullback correction, I think, was close to 6%? Yeah, there's a 7% pullback. So we have 9 weeks in a row, followed by a pullback. Okay, fine. Go back to 2018. That's the last time I also saw a 9-week run. This would be 2019. 1, 2, 3, 4, 5, 6. Pause. But 2018. Coming off of a 20% correction. Coming off of a 20% correction. There's 20.5% to the downside. Here, you have a nice little run. Even though this is a sliver of red, it was right at the same high. 1, 2, 3, 4, 5, 6, 7, 8, 9. This is 9 weeks out of 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So 9 weeks out of 10, higher highs and higher closes. And you can see that we did pause and pull back. There's about a 3% pullback. Market chopped around for almost 4 weeks before we went higher and then went lower again with another, I think 10% pullback. This would have been high to low of around 8%. So just on the technical side, I mean, are we due for a correction or at least a pause? Yes. It's hard to think that we're not going to get something. At least a pause, probably a pullback. I want to look at a trade this morning, maybe on oil. Price us something on oil futures that would maybe not be a terrible trade. I'd have no upside risk, a couple $100 of profit, maybe a profit trap as well for like maybe a 40 to 50 day trade. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Interesting. So this is 2017, August. 1, 2. It's not higher high, so it's not consecutive, but 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. We had 10 out of 11 weeks in August 2017 before we had like a 3-week pause. Okay. Again, this doesn't have to stop, but part of me is willing to take that calculated bet to say, all right, if I can define my risk, I think we're going to have some type of stall or pullback. So we'll see what happens. The put condor that I built out right here, it's potentially in. I mean, it could be in some trouble if we get to 7,600 today and stay there. Where this trade gets really interesting for me is Tuesday morning. That's my expiration is Tuesday end of day. If by Tuesday morning we're still below about 76.15 or so, I should see a profit trap coming into Tuesday morning. Now, not the full profit trap, but I mean, if I'm pulling in $2.50 here on this tail credit, I'd be looking at maybe a bonus profit of maybe $400 to $500 as long as we're not greater than 76.25. That's where I'm taking on most of my risk. And if you remember yesterday, I built out that butterfly spread to defend this thing. That is a 35 butterfly. So from 20 to 30, yeah. So from 20, so risk 35 and risk. I have defense in here. And that defense is up to $1,400. So I guess I could draw it this way. I have a little bit of risk at 20, starts to ramp up at 20 to 35, and then down to 40. Right? So I'm really curious to see, like, do I survive this trade coming into, Tuesday morning? Because two things could be really, really interesting. Tuesday morning, if we're less than 76.15, I'm going to start seeing some profit here, which is good. I can cover the 70-cent debit on my butterfly and focus on the 3, 4, 500 profit on that in the money put condor. Okay. If I'm wrong on the put condor and I have most of my risk there, this is up to about 1430 of profit with a max risk here of around $1,700. Okay. So, and again, I've got to get price way out here to take on max risk, way out here. So could be really interesting. I mean, it could be totally wrong, but I'm willing to kind of hang on to it based on expect the move. We had a 16.5 VIX. Now we're down to sub 16. I'm hoping I, kind of position this enough with the expect the move to be safe. But what do I know? I could be wrong. Okay. But I'm willing to take the risk. It's that simple. If I have the risk, I'll take it. I'm going to keep this trade, running and see how it plays out for the weekend, see how it plays out for Monday and Tuesday. But Tuesday morning is where this trade gets really interesting as far as where we're at today at the close, where we are Monday with price action and going into what could be next week is 10 weeks in a row. Engineered options. Do I feel bad that we didn't get a single trade in this week? Yeah. I mean, a participation trade would have looked pretty good for today. A break even trade, we wouldn't have been filled on. It didn't really pull back. We had, what was it, Tuesday, Wednesday, no price action whatsoever. The previous week's Friday, no price action whatsoever. The markets have barely moved. And then yesterday we had that little breach to the upside in SPX. We were fortunate to get that nice little fill on the Iron Condor. So, hopefully you Daily Profit members enjoyed their $2 winner yesterday. Okay. Greg, we did that one yesterday. It was a 75, it was 76.20. I'll show you the trade. So here is, I'm curious if I get filled on Dell, by the way. That'll be crazy to see what this looks like today. SPX for the second. So I did the 76.20 by 76.35 by 76.50. That is my butterfly spread. So that's my defense butterfly. This is my in the money put condor. Okay. I was also looking at oil. I might actually take this trade. The hard part is I can't build this out. Does anybody have who has option strat? Does anybody have paid option strat with the ability to build out a futures trade? I guess that's my one beef with option omega is I can't build out a futures trade. But I was looking at the futures contract out 48 days into July to see if I could build out something around like the $78 zone or $79 zone. So we're basically trading about $2 off a real spot price on US oil. So it's like $2 different. So if I wanted to play this on oil, so here's US oil. Let's go to the daily chart here. If oil stays above, $79, what I'm thinking of building out here is could I get a tail that gives me a couple $100 of profit with a profit trap with a defined risk trade? And if we end up at least catching a bid and holding a bid, then this would be worth, maybe $200 to $300 of profit. So this trade would be worth, let's say, $2 to $3. And in oil futures, it'd be 20 to 30 cents. But have maybe a profit trap in here worth a dollar. That dollar profit trap would be $1,000, and then take on some defined risk. It's probably going to be backwards reward to risk. It wouldn't be asymmetrical. I'd probably be taking on maybe $600 to $700 of risk. But I think if oil catches a bid in the next 40 to 45 days, I don't think I'd be surprised. If it overshoots and snaps back up, I wouldn't be surprised. So, we have this like 60-day window with whatever's happening right now in the US and Iran. So I think I'm going to look at this trade. Now, the expected move is all the way down here to like 68. I think I could build it out for a reasonable trade. Let me see what this looks like. So if I go 75, 74, 73, and 71. So that's a 90-cent debit. So I'm risking $900. I played around with this earlier. 76 by 75 by 74 by 72. This one's a little bit more manageable. Let me do the math on what my profit would be. So if I have one wide $1.50, yeah, I'm going to make like 40, $50 on the trade. That's not what I want. I'm going to go a little bit wider. So this would be making $130. I don't really like that. Let me take this tighter. So this is a 50-cent for a 2 wide. I get $300 in this trade, but a little bit more risk. Gosh darn it. I had it built out earlier a little bit better. So 77 by 76 by 5 by 3. It's more expensive now. 78, 77, 76, and 74. So 80 cents debit. So this one, I could get $200 if I'm right. A profit trap of 11.9, or I guess it'd be $1,200 if I get this thing filled for an 80-cent debit. I'd be risking $800 to make $200, but also have a profit trap around the 78 to 77 handle. Uh, could I go this way? 8, 7, and 5. It's about the same. So risking, 780 to make like 220, 230 with a profit trap of about $1,200. Um, I think I'm gonna try it, and then I'm gonna see if I can get a butterfly spread that maybe offers some defense. Before I take this trade, that'd be 78 cents. I know we have the market opening in 6 minutes. I'll be ready to go. Expect to move stuff plus or minus 32.42 today. 32.42. And when we open, I'm looking at kind of a static measurement. We do have a decent flow towards the 7600 gamma today, but couple key levels. 76.10 to 15. Hopefully, price doesn't exceed that. Down here to 75.15. We know that a big resistance level all week was 75.50. So 7600, 7550 looks like pretty key levels today. If we had an inefficient day yesterday, we have an efficient day today. I would expect price to probably stay within 7600 to 7550 today. That's an ask. I mean, obviously, it doesn't have to do it. But based on yesterday's inefficiency, I'm thinking that okay, we probably don't go too much higher than like 76, 10, or 15. Um, I'm curious what the delta looks like. We're at 73 right now. Market's expecting a 32-point move. Do we go 32 points straight up, or do we, hit some highs and then fade a little bit and see where this kind of settles in for the day? We'll find out. But I'll repeat that: 32.42 is the expected move on Tasty. My static measurements here: 76, 10 to 15. I want to see what that delta looks like, and then 75, 15. I want to see what that delta looks like. I'll probably look at a daily profit play that's delta neutral again, and see what that credit offers. Okay, futures are like what 0.1%. Yeah, 0.1% higher. So it's going to be a small gap up this morning. So my expected move box will be a small gap up. By the way, I'm still compiling. I had a lot of people email me yesterday, so I'm still compiling all the emails and the TradingView IDs and stuff, and I will get you your access to my expected move box. So if you emailed me, purchase my expected move box for $20, I'll give you both the expected move box for the SPX as well as the expected move box for the all ticker. So it's going to be two different invites for TradingView. It'll be two different links for Thinkorswim. I will get all those out this weekend. So I'll share that link later. You can email me on it again today, and I'll let that just kind of compile over the weekend. Starting next week, though, starting on Monday next week, you have to buy both if you want both. If you want the all ticker one or you want just the SPX one, it's going to be $20. It's cheap indicator, but I use it every day. Okay, but I'm just giving you a window now. If you want it, then just send me an email. I'll send you the details, but I'll get you slotted in for both over the weekend. Yep, I will. I'll share that link. Just send me an email, JJ. ChrisPulverPub@gmail.com. Just send me an email. And once the email's in, I had like over 100 emails yesterday. So I will get to all of them with here's the buy link. And once you're in and you're in my system, I'm just recording if you need TradingView, make sure you give me your user ID. So I need this. This is my user ID. So my user ID is Chris Pulver. Some of you are putting TradingView, and it's like, that's not what the user ID is. I need this to be your user ID. That's how I can give you access to the TradingView indicator. If you want Thinkorswim, just type in Thinkorswim when you purchase it, and I'll send you the grid link to download. Yep, ChrisPulverPub@gmail.com. Thanks, William. Okay. If you already have the SPX box, then I'm going to give you the other one. So if you already purchased it, I'm just going to give you the other one. What I'm saying is, starting next week, if you have not purchased either one of them, they're both going to be $20. And that way you can pick and choose if you want, any ticker or just the SPX box. It's just a cheap indicator. Okay. But if you're in already, I'll give you both. And I'll give it to you for TradingView and Thinkorswim. Cool. All right. What else? I want to see what the deltas look like this morning. We're at 7573. Is the market going to, give anything back to end the week? It'll be interesting. I still think that this inefficiency from yesterday is a pretty interesting spot just to watch price today. If we open up around 73, do we get to 76 and then fall? Maybe, right? As we go into that ninth consecutive winning week, what happens with like today, end of day? What happens to Monday and kicking off next week? I could be dead wrong and we go into a 10th week in a row. I'm just not a believer that this market's going to keep stretching past the expected move to the upsides. Okay. So for today, I want to see where these levels are at. I don't know, this is going to be a tricky trade here, but I may only focus on bear call spreads today. So whatever my calculated move is with a slight gap adjustment, if we're opening up around 75.70 or so, this is live price 75.73. Let's take the 73. Let's put our 32 points on top of that. Yeah. So, I mean, if I'm looking at premiums around like 76, 76.05, 76.10, I mean, I'm probably looking at some bear call spread combos up here. If I just do bear call spreads, I'm also going to play some defense. I don't want to get, I don't want the risk to the upside. Okay. All right. It's opening bell, small gap up. Let's see what we have around like the 76, 5, 10, 15 zone. Because I think price can make its way to 7,600. That seems like an attractive gamma level today. But I'm going to see what the deltas look like. So I'll come back to that oil trade in a second. So for today, end of the month, by the way, let's see. What is this pending order? So this is June 1, May 29th. That's not okay. That's not going to fill. Cancel. There we go. I want to get that trade clear. So we're at 75. If I looked at a 15 by 30, 25 by 40, I'm going to take this and play some defense. I'm going to try to get $1.60. See if I can get $1.65 credit out of these. Now, I'm taking some risk, but I'm going to go barrel call spreads. Maybe go one strike higher. Move this up, move this up, move this up. There's $1.20. That seems relatively safe. $1.20. $1.25. Let's get $1.25. All right, I'm going bear call spreads only this morning. Filled at $1. What trade that? Did that just get filled? Of course it did. There's my $1.25. All right, $1.25 in. All right. Daily profit light coming in. I'm doing 2 bear call spreads. I'm going to play some defense as well. I'm just doing bear call spreads. Again, optional if you want to do your standard daily profit light, you know the deal. Find your deltas. I'm looking at a 9 delta starting point. So 529 expiration. Starting with the 7620. I'm going 15 wide. So $1.25 credit. Okay. And I'll sprinkle in some defense here on the upside. So if I were to go 15 to 25, 15, 25, 40. That's a 35-cent debit. If I want to take on a bit more risk, I can make this relatively cheap for pretty safe $100 on the day. It's only a $10 profit trap, which puts my break even at 76.35. I mean, that's a 5 delta move. Could we go up to that? Could we go up that high? I mean, 7,600 seems, flow wise like we can get there. But I'm going to bank on some efficiency. So maybe around like this 15 handle. So let me see what else I can do for some defense. So 20 is where the risk kicks in. If I went 25 by 40, I don't want to throw 40 cents at it. I'm going to do this $1.25, similar. Let's try to get like 25. I'd be like dead wrong in that trade, but risk 500 to make 2,500. If that, I'll take the same bear call spread combo and just give me something ridiculously high credit. All right, and then I'm looking at a broken wing. So 76, 15, 25. Like this one wouldn't be terrible, but I don't really want to pay 30 cents on it. It's frustrating. I can't get just a small credit on some of these call butterflies. This one's a little bit better, but I just don't love it's only $1,000 profit trap. So that's a 5-cent debit for defense. So that put me at break even at 7,635. Tempting 7,635. Let me check my. Let's go daily profit. I want to see what the ATRs look like today. So look at that. I got to recenter it. Recentered around 7,563. That was yesterday's close. So 50% ATR, 100% ATR is around 17. All right, that defense isn't terrible. Kick it in by 15 to 25. All right, I'm going to go after a 10-cent to 15-cent debit here. I got filled for $1.25. I'll play a little defense on that broken wing. Looks like it's going to be a bit more expensive than I want. So those are sell trades. So that puts me at a better break even. $0.10 debit. All right. If I pay for a little bit of defense, this gives me protection up to SMCI. What happened there? Did we just get filled in SMCI for something? Hang on. We just got hit. So pinch point scanner, trade number 111 just closed out for a 50% winner. I'll add that. That's what I love about pinch point is I just take these trades and they take profits. So pinch point, SMCI, trade number 111 just hit for 50 cents. So that is nice little 50% return. All right, that's trade number 111. So pinch point. Trade number 111, SMCI, entry $1 debit, close $1.50 credit. Profit target hit. Nice 50% winner. Not bad, not bad. Not yet on top insurance, no. So SMCI is a winner for pinch point. Let's go back to SPX. We're trading at 85. Let me look at the. So I'm looking at like a 5 or 10 cent debit on defense today. It's probably going to trade for like 15 to 20 cents. Let me see if I can get out of here for like maybe 15 cents debit. So it's a small debit. I'm taking on some risk, but let me see if this will fill for 15 cents. That way, at least I have $1,000 profit trap. All right, I got a 10-cent defense there. So top defense. Again, defense is optional, but I tend to play it. 7615, 7625, and 7650. That is 15 cents debit filled. So small debit for a $10 protection. Break even price is 7635. And no risk lower. Ideally, a pin at 76. We can ramp this thing up from like 20. I'm going to put a pin area at 7620 to 7630. That's up to $500 to $1,000 to $500 on that profit trap. So for between 7620 to 7630, that's $500,000 of protection. So hopefully it's enough to help. And then I'll do a similar trade. I just don't know if a broken wing call fly here will actually fill for any credit, but I'm going to ask. So a $10 credit. That puts me up with that puts my break even up to 76.45. So I'll put a $10 credit pending. It's unlikely going to get filled, but at least that's protection. Okay, we'll see what happens. Deanna, you see that message from Dan? Can we get customer service reach out to Dan today, please? It just came in the chat from Dan. Email customer service on Flashpoint Income. Okay. So 7690. Gamma is there we go. So there's the 9091. So do we poke 76 and reject? Is there actually a resistance level here? Or is this market just like, just go, baby? Just go forever. We'll find out. So 76.11 is my expected move box high. I'm starting at what I started at 15? No, I started at 20. So 7620. 7620. If we stay below that, can I get any premium today from like a 7510? Let me see what the deltas are probably already super, super low. I mean, I could get a little bit of premium here if I went 10, 15 wide, 15 wide. I mean, is that worth it? It's another $3,000 of risk for 50, 60 cents. It's a pretty terrible trade. I'll see if these put spreads maybe offer me another. Let's see. If price falls at all, it's like, give me another, $2. Super, super low deltas. All right, I'll put this out there for $3. Okay, so we're at 75.90. I'm stacking up some bear call spreads, playing some defense. And my line in the sand for my iron condor is 76.20. I want to see price stay below that. So I'm playing defense right in the same area. And let's see if price, maybe respects 76 and falls a little bit. Hopefully stays below my expected move box at 75 or 76.11 with the gap. That's gap adjusted, by the way. So hopefully that's going to be nice and safe. But it's the end of the month. I get it. Like, market's getting pumped from all sides. So I get that I could be taking out some heat today if I'm wrong. I'd love to see a gap fill today. I'm not going to lie. Like, I'd love to see a little bit of a gap fill today. Come back to, 75, 60 or so. Maybe we even come back into 50 since that was our previous resistance for the week. And then see if we can come back to like 25, which is where this thing broke loose yesterday. Flashpoint alert. Yep, let's take a look. Again, Flashpoint's going to require some pain. Markets showing little to no pain. Do we have pain yesterday? No. Do we have pain today? So far, no. Do we have pain this week at all? Sideways. The only pain was actually up and then back down. It wasn't enough to get us into that pain point. It's okay. I just like putting in pending orders. So Flashpoint alert is in. Pain point is 74.94. So I'll build it out. This will be for 2 days. That puts me at so Monday, Tuesday, 2 trading days puts me out to June 2nd. And my pain points can be down here into the 7,500 zone. So again, this has to get filled for today. So if I put the pending order and I'll follow the alert, 75.20. So 20 by 25. Set that up for a 255 debit. Good for the day. Take profit is 325. I'm going to go up a little bit higher than that. I'm going to go after the 40% winner, so about a 355 credit. And then stop loss 5 and 05. There we go. So this is my Flashpoint entry, 255, and then the conditional orders if it gets filled. So it's good for the day, good till canceled. That's my Flashpoint. And then my tsunami level is a little bit lower, 7470 by 75. A little bit higher debit, 275. Good for the day. 325 is a small winner. I'm going to go after about a 30% winner here. And then the stop loss. Okay, 275 tsunami order, good for the day. Removes if it's not filled. Review and send. Okay, Flashpoint's in. Should we cancel the 6-1 SPX trades? Well, they should have already been canceled. Are you talking about Flashpoint, Stephanie? They should have been removed yesterday. Is that what you're referring to? All these trades are good for the day. So if they don't get filled, they should automatically be removed. We're never taking Flashpoint trades good till canceled. We're taking them always good for the day. So the way this works is we want to see if price is going to fall, then we get our Flashpoint level. That's where we get filled. If price doesn't activate the trade, this doesn't carry over to the next day. These numbers are useless. I want new levels. I want tomorrow to bring some pain. Then we get filled for a bounce. Oh, engineering options. No, I'm just going to leave them. The only trades I have are defense trades. They're fine. Honestly, I think they're fine. They're defense trades. If we look at the workspace here, let me go to engineering options, pending orders. June 1st, XSP. 741. These are still great trades. If we fell to fill those levels by today or Monday, I'd still take those for bounces. Flashpoint, Rob, the alert's been sent out through one-click trading, and it's in your member Telegram. It's not too late. No, they're pending orders, so you can set it up, anytime in the next, 30 to 60 minutes. They should be fine. Okay, so let's see what happens on the day. 76. I guess we have some growing gamma, but I'm just still kind of banking on this, okay, yesterday was inefficient. What's today going to give us? Another inefficient day? I would hope not to the upside. We'll see what happens off of 7,600. We could hit, reject. I'd love to see price kind of settle in less than 7,600, maybe settle back into like the 7,550 zone. Um, but yeah, it's end of the month. I mean, there's going to be some shenanigans here. We'll see. This is my ATR. I mean, getting up. So our trade today at the 7620 call strike, if this gets tested, that's 100% ATR. I mean, my hope is that we're not going to stretch to that with like little to no chop. If we open up and go straight up, I mean, it's rare to see the market do that every single day. So, this candle here was still tested, having one, two, let's say we have a couple of more aggressive candles. It's like if it's straight up for the day, it's probably going to pause, maybe pull back. Should be okay. I went bigger on both. So my flashpoint order, I went for a 39% winner. So I bumped up the target credit. Let me look at the trades again. So for flashpoint, I'm looking at where's my credit? I went for a 355 credit on the tsunami. And a 355 credit. Is it both? 255. Hang on a second. This one. Yeah. So I'm going after a 255 debit on Flashpoint for a 355. So I'm going after $100, which is around a 40% return. So I just played around with the numbers. I'm typically going to do that for my like kind of personal best practices. Is if I get the Flashpoint trade, I'm going to go after 40%. I'll manage it at 30. I don't care. I'll manage it at 30. Because I don't mind following like the exact details, but 40 is always pretty good because my average loser is like 30%. So if I hit 40% winners, that makes my winners slightly bigger than my losers, which just allows me to build this even easier. I mean, it's an okay pin, but I mean, I'm going to say no. I mean, it's an okay pin for right now, but there's still, I mean, there's a lot of day left. There's a lot of day left. So I'm not calling that as a pin. I mean, the initial trade, if we open up around 75, the initial trade of going like 20 to 30 wide here on a butterfly, that may have been a better trade, but it's so early. I mean, it's 9:51. You're talking about a trade that in 20 minutes is, do I take profit now? It was just too early. So I'm looking to see if the market just, has any type of reaction to this like 7,600 area and maybe shows a little bit of pause and pullback. Okay. We'll see what happens. Jeff says, yesterday I took 50% profit on daily profit after 1 hour call today. That's awesome, Jeff. Yeah, good stuff. Yeah, that was really quick. I mean, yesterday's daily profit play, since we got filled in that kind of pending order, I mean, we were live in session when it was, filled here for $2. So our trades filled for $2. And as soon as this thing retreated, this is already showing like, I mean, the debit was trading down to like 70 cents. So, I mean, you had some pretty quick profit on the day if you were protecting it. I let it go a little bit longer and grabbed the full $2. But yeah, great trade, man. Yep. Okay. We will see how the day unfolds. So I've got defense from 15 to 25. Is it cheaper? Should I play some more defense? Trying to think. 20 to 35 and then 30 to 45. I could probably look at like a 30. This is a little bit more defense to play. I just want to make sure it's cheap. It's not cheap. I mean, if I'm playing 10 wide defense, like that's cheap. I can go 10 wide here for $1,000. That'll offset some of the risk. But I'm chewing into my daily profit play if I do that. So I'm just going to let this marinate for right now and just see how, maybe we kiss that 7,600 zone. Maybe we kiss the round number and then fall. I'd like to see the market at least respond to some type of like, hey, we're respecting the move and respecting the calculation of are we going to have two inefficient days? Hopefully, the answer to that is no. Okay, so let's see what happens around this like 7,600 handle if we get a little bit of pullback. I mean, today would be a lovely day to see the market just pull back to the same area that we started. Pull back to this level, maybe a bit of a gap fill. Like I said, 75.50 was a level of resistance all week that got broken. So if we come back and find that, or find this inefficiency from that U.S. Iran deal yesterday when the market surged up, I mean that was like, what was that, 30 points in 5 minutes? That's a big move intraday. So double ups. I mean, I think the opportunity was to get in super early, and I don't love double ups at 9:30 in the morning. The trade was if I wanted to go chase the 7,600 strike, that we get in right away, get a butterfly around the 7,600, price goes up 20, 30 points. Great. But now you're going to be up, I don't know, 10% return, 15% return. Like it's not a big winner. And I don't feel comfortable leaving a double up trade on the entire day and saying 76 is the pin price. I mean, could it be? Sure. But I don't know. I might look at a kind of a crazy defense trade here if it's cheap enough. So that's like 35 to 40 cents defense. I'm in a $1.25 credit. I don't want to give most of that back. But for a 30 to 40 cent defense trade for up to $1,500, like if I'm going to get blown out to the upside, I'm definitely going to play defense. Like at the end of the day, this is about risk management. So where's most of my pain? Well, my break even is 35 on my defense trade already. My second iron condor trade is at 30 to 45. So we need to have a little bit more defense in that window. See if I can go like 55. Gosh, man, even that is more expensive than I want it to be. This one's not bad. Let me see if I get in here for like 30 cents debit. If we pull back at all, this trade probably gets filled for like a tiny little debit. All right, set a couple chart alarms go off. AVGO. So Dell's up to 425. I want to look at that Dell trade. It didn't get filled yet. I'm curious what the credit is showing right now. Dell. So it's trading for about 575. I mean, great. If it keeps going crazy parabolic, I mean, maybe I get filled for this trade at $13 credit and have $2 of risk. And then if there's any fade in this thing in the next 20 days, we could actually get very lucky on a low risk, high reward trade. But yeah, I mean, when you go up 35% overnight and an 11% expected move, you get some crazy prices. Part of me, I really think this is not going to fill. I don't think our Dell trade's going to fill for the credit that I want. Do I expect it to jump there? No, I don't. I'm saying if it does, I want it to be cheap defense. So the shenanigans for today, it's like end of the month. That's the only reason I'm like, well, we gapped up. So here's SPX gapping higher from a 63 close. We're up to 95 already. And then the weekly candle is just looking more and more convincing. So do I think we're going to 76.50? I mean, we shouldn't. Based on efficiencies, we shouldn't. But just in case, if there's open interest here, this dynamic expected move is shifting up to about 25 now. I mean, the 7,600 looks like an attractive spot to maybe see price kind of hit and then dance around for the day. My question, of course, is will it stay there or does it kiss and give some back? Like poking highs on Thursday, poking highs on Friday. Does the market give anything back by the end of the week or the end of the month? Maybe. We're about to find out. So I'm just hoping that we have a little bit of reaction here at 76 to maybe fall back in line. More importantly for me is just stay below, right? Stay below 76.11. Stay below 76.20. That's my goal for the day. All right. I'm going to cancel that 76.50 butterfly. I don't think I need that. Let's see. 60, 70 cents credit. This one's not a terrible trade. Got a profit trap in there. Maybe an extra 60, 70 cents if we stay below 70. I think I just need to build this just a tiny bit higher. So 205 credit. That puts my break even at 76.15. I'd like to make the extra. I'd like to make extra 260 to 270. The problem is there's a lot of risk on this trade. This one's not terrible. If we hold below 7,600, this trade pays $1.50, risking 350 to make $1.50. That's not terrible. I think I'm gonna take this trade a little extra defense. I don't know. I don't know why I'm being so freaking bearish right now. I guess I shouldn't be, huh? Just let price be price. I won't force it. I'll take this trade instead. I'm going to take this trade for a $4 credit. That way I'm risking $100 to make up to $400 plus another profit trap. If we hold at 7,600, that'd be a pin at, I'm going to put this trade in. That way, if we go up a little bit higher towards like 76, 10 or 15 or 20, but fall back down, I'm going to see if this trade gets filled. This is a little bonus trade. I'm risking $100 to make up to $900 if we hang out at 76. I like this trade. So I will put that one in as well. All right. I'm going to put this in for daily profit play. This is optional. Okay. Optional, low risk, high reward play. So I'd be buying the 7590, 7595, 7600. So if price rallies up to 7615 to 7625 today, this may fill, then need price to fall back towards 7600 for a close or lower. $4 to $9 profit for a $1 risk. Pending order. Daily profit play SPX trade has gone higher and $1.25 credit still can't get filled. I mean, it should be higher credit now. If I did the $1.25 credit, I mean, I'm in trouble on my trade, right? Here's my call side. I got filled for $1.30 on. Oh, look at that! I got filled for $1.30 on my trade. Look at that, a whole 5 cents more. Okay, so I got filled for $1.30. Right now, that trade is trading for $2.85. So if you want the same trade that I'm in, you can get $1.60 more than I did. But the risk is, I mean, if you're taking 2 bear call spreads and you're going to see price go up and threaten them, this is why I'm also playing defense. So I mean, I don't want $1.25. If I want the same trades, I want $2.50. I want $2.60. I don't want $1.25. I'm in a I'm in a drawdown right now. All right, let's have a look here. Let me get my Iron Condor. This thing was filled for $1.30. So 7620, 7630, and then 35 by 45. That is my daily profit play. So DPP. So I'm just doing bear call spreads today. Down a little bit of did a little bit in drawdown. This one's going to be just top defense. So group top defense. So I want to keep an eye and see if price will stay below 76.20 on the day. I've got defense that kicks in at 76.15. So when I map out my trade for the day, this is my line in the sand for the bear call spread. I've got profit traps that kick in at 15. So they kick in at 15, go to 25. But ideally, I can still get some profit and protection here around the 76.30 area. So this is where I potentially have some defense. If price is going to, flirt with this yellow box, I have some profit. To make my life a lot easier, I want to see price stay below that blue line. Okay, we'll see what happens. At the end of the day, I mean, look, if we're up to fresh highs for Friday and we give some of it back, the nice part about reading the tape on Friday and the end of the month is that the market can stay just above this level, and all of the common passive watchers can say, "Oh, market's up again today," and it's green. What I'd like to see is price to be up here and then give some of it back. Stay positive on the day, fine, but don't give us any threat to the upside at 76.20. That's what I'd like to see. But as we saw morning, yes, we have a big gamma level at 7,600. It's not that surprising that price has gone up to it in 20 points really quickly. Is it a decent pin potential? I mean, so far, sure, it's a little bit of a front runner, but that means it's going to be what, hanging here all day? Is it just going to hang and cling and sit at 7,600? It could, right? It could. I also wonder if it's at 7,600, that'd be a 760 XSP trade. I mean, what's my rewards risk? If I did an iron fly at 760 and I went, let's say 4 wide here, I mean, I'm risking 2 to make 2. Like, I don't love that trade. And for this, it's like for my, I mean, the reason I do it this way is it's lower risk, right? If I'm going to do this on SPX, I'm essentially going to be, risking a couple $1,000. So this is low risk, but am I confident that we're going to hold 760 all day? I mean, I think there's a bit more volatility at the end of the month than that. So we'll see what we have. The Dell trade, the Dell trade's right here. So Dell trades at 418. This did not fill, by the way. So next week, if price ends up going a little bit higher, this thing might fill. And then I need to see price, come back and try to eat into this gap a little bit, and maybe we can make some, it's a low risk trade. I'm risking if I get filled for $12 credit, I'm risking $3 or $300. If I get filled for $13 credit, I'm risking $200. But price is going to have to push more to the upside for that to happen. So, like I said, that's the nice thing about defined risk and setting the trades up is price has to come to me. If price does this crazy earnings move and starts to fade today, guess what that means? This trade's not going to fill. And that's fine. That's why I was stubborn on the trade in the first place, which is I'm not going to let this trade be something I can fill on for low credit. If I'm going to call the top on something parabolic, give me a super, super low risk trade. No, it was June something. Let me check. Dell. It was like the middle of June. I was doing the June 18th. It's the monthly expiration. Yeah. So I'm just going to leave it open. Okay. One thing that could be pretty interesting for the remainder of the day. I mean, I don't like this trade at all. Actually, you know what? I kind of do. For Project Options Edge, who wants to get a little nuts with me in Project Options Edge? Look, this market has had a ridiculous run. Here's the SPY. I might look at like a Tasty 101, probably 45-day window, something like this. Overbought conditions, 9 weeks in a row, little pause, little pullback. I mean, if we pull back to this level, I'm going to look at a ratio spread somewhere in here around like the 700. Let me see if I can build out this. This could be a pretty interesting ratio spread. Let me look at. I'm going to do this on probably some of my margin accounts or some of my larger IRA accounts. SPY. Let's see what 30 to 45 days looks like. This is a July 19th is 49 days. Let me look at the 700. Right now, oh my gosh, man, that's crazy that we're at a 12 delta for that 700. All right, so if I were to, let's go 710, 700. All right. I'm looking at a little income trade out 49 days for Project Options Edge. Am I willing to take some ownership at 690? Well, if we have a pullback to 690, let me see what a percentage looks like. That is about a 9% pullback. If I go 715, I'm just under $2, $2 profit or $2. I mean, and then again, for me to make, 240 versus $1.90, I'd rather have the $15 buffer. And that way, if we're in this profit trap zone, that brings my cost basis down to 685 plus the credit. So 685, that maybe gives me like a 10% correction. So if we have a 10% correction the next 40 some days, 685, now we're talking like a 9+% correction. I mean, part of me says I'd love to see it. Is it likely? I mean, it shows a 95% chance of profit. This would be a huge run in the volatility index, by the way, which is another trade we could look at for crash insurance. It's been a minute since I've taken a crash insurance trade, but maybe looking at like a 30 to 60 day VIX trade. I wouldn't mind going long the VIX at a sub 16 VIX. If we have any turbulence this summer, I think the VIX goes back up to like 25 or 30 ish. Maybe stays within that wheelhouse. Maybe not a 60 VIX, not something insane. But anyway, let me put one trade out in front of the other. So Project Options Edge, this would be, if you're willing, this is what I'm thinking. I would do a bit of a campaign trade here. I'm willing to own the SPY with the assignment price of 700, but my break even would be 685. If we come down to revisit 700, this also is a huge profit trap zone. So this would be where I ramp up. The ideal pin price is going to be here at 700, and then I have another 15 points lower to take me all the way down to the 685. That'd be my break even. Plus, if I get the $1.90 credit, I'm down to about a 683 break even price. And I will repair with covered calls. I'll repair for income on the SPY. So I'm going to do this trade. I'll try to get, hopefully $1.90. I could put this trade in for more credit. If we have a pullback coming next week, I could probably put this trade in for a higher credit and just let it come to me next week and try to get $2, $2.25, maybe $2.50. let's see. So 700 SPY. I mean, that's a pretty good correction. 685 isn't here. What does a 15% correction look like? 15% is ugly, man. Oof. Like, is that the trade? Or should I go maybe down to a better strike? You know, maybe start like 675. What's that naked put? 675. I mean, I guess what's the lower cost basis? 683 or 673? For the same amount of credit, that's a 7 delta. I mean, I like the profit trap opportunity on a ratio spread. I just don't know if it's not really going to improve my cost basis. Let me see what a 680 by 675 looks like. I mean, that's fine. That's fine. That's fine. I mean, this is a $1,500 profit trap with a break even of 650. No, 660. Sorry, 660 from here. 660. I mean, that's it. I can absorb about a 13% correction and repair this thing. I'm going to take this trade. This is Project Options Edge, 690 by 675. I will take this trade. This is a $1.25 or $1.30 credit. I'm going in for margin accounts. All right, got filled for $1.30. Okay, so I'll try this for $1.30. All margin accounts here getting some love. Getting filled. All right. So give me like 60 seconds to get these trades on. This is going to be a Project Options Edge trade. Okay. Almost there. All right. So that is Project Options Edge. This is going to be trade number 144. SPY trade, a little bit shorter term. I'm going 7/17 expiration. Buying the 690 put. Selling the 675 put. So I got a 15 wide profit trap. I got filled for $1.30 credit. Pretty conservative, but near term ratio spread. I'm willing to own the SPY if price is less than 675. Break even price, if assigned, would be I take my 675 assignment minus $15 profit trap minus $1.30. I'd own it at 658.70. 658.70. And I'd quickly repair with covered calls for $500 to $1,000 income. Okay. So that's going to be the plan. Is like, I don't plan to really lose anything. This is likely going to be a $130 winner. We're sitting probably like a 95% chance of profit or so. This is 99% chance of profit. I mean, that's pretty good. But also that's with a low VIX. We're at sub 16 VIX. All of a sudden the VIX rips to 20. Well, all of a sudden the expected moves get wider. You know the deal. That could be, threatened, I guess, right? So 99% probability of profit. But we are at a sub 16 VIX. So any VIX increase may decrease the POP for pop, probability of profit. Just to be mindful of the risk. Okay, what I'm thinking of next is if I look at going long the VIX, let's kind of look at some. I might look at another synthetic VIX. We're at 15.6 right now. I mean, even a VIX from like 15 back to 20, it just seems like there's no way it's going to happen. I mean, I don't know. All it takes is oil. Honestly, if oil spikes back up to 90 or 95 or $100, markets pull back after 9 straight weeks to the upside. But who knows? I mean, this could be a throwaway trade. I want to see if I can get something priced on the VIX that's not obscene. If I go VIX, I mean, July to August VIX, I hate to have to go out that far. What is my... What's the worst case scenario if I went synthetically long? If I did this, and this might be a terrible trade. If I went synthetic long at an 81 days expiration, go out to August or September. I mean, right now we're trading a 15.6 VIX. If I were to buy a call, sell a put, this is what I'm talking about. This is why I kind of hate trading the VIX all the time. It's fine shorting the VIX, but getting long the VIX can be so difficult. So this is synthetic long. I buy a call, I sell a put, but the put premiums are absolute trash, right? So for $6.40, I have 100 days in the trade, 109 days. So it's a measured move. It's a risk. If price falls, I mean, could I be assigned the VIX? I'm not really going to sit and own it. And all it takes is one push to the upside, and I can get out of the VIX for some gains. The good thing is, even if I own the VIX here, I'm not going to be sitting on shares. It's like I just want to get out with a spike to 20. But the put is almost worthless. So I might as well just do a defined risk trade and not bring in this potential assignment, right? So that risk is like max risk of $2,100 if you're assigned. I'd rather just buy the call. If I just buy the 15, or you want to build in some intrinsic value, I hate paying $670 because I feel like it's going to be a worthless trade. If I wanted to do 15 by 30, pays a little bit less. So this cost me less than $500. I have some wiggle room in here where it's 15 wide on a sub $5 debit. Hard part is on this one is like, if price does spike to 25 or 30 VIX, I'm not really going to get the full profit potential out of this thing. I hate the VIX so much. Yeah, I know. I'm just saying, if I was synthetically long, I would treat it that way, where it's like there's no assignment here, but I was trying to make it cheaper than just do. So, example, if I did synthetic long in the SPY, example. So let's say I want to go out to August and do a synthetic long. I buy a call and I sell a call. I mean, this is pretty nice. I accept the risk of price falling, but I could basically own 100 shares of the SPY for a debit of $430. That's incredible. So I do like to do synthetics. I buy the call, sell the put at the same strike. I do that synthetic long when I think I'm at a low. We talk about that S5 FI market breadth indicator. If I think there's a good opportunity to get long, I missed that market breadth level this year because it was down to 17. I was looking for like a 12. Last year during Liberation Day, I got synthetically long on all of these. I was SPY synthetic, Q synthetic, Russell synthetic, Dow synthetic. I was holding all those long through, March's lows, and I guess no, April lows last year. So April lows last year, I took a stab on all those and had very little drawdown because within like 2 or 3 days, I was getting that big move to the upside. So that was a very inexpensive way to do it and having minimal risk because we caught a bit of a bottom. I'm not going to do this long in the spy. I'm just saying as an example, when you have decent uh, premiums, I can offset the pain of like just buying a call for $25. It's like, well, it's going to cost me $4.30. I'd love to get long the spy on a discount when I think we have a decent pullback. Let's say we have a 10% correction or 15% correction. I'd love to get synthetically long the SPY if we have a pullback, right? I just can't justify getting synthetically long when I think a pullback is coming sooner than later. But that's a big difference. Instead of just buying a call, I mean, it cost me $4.30. But yes, I have to be monitoring this position because if price is going to go against me, I'm on the hook for assignment because I have a naked put. So anyway, on the VIX, it just doesn't work the same way because the VIX going long, if I'm out to, and do I think I need to be that long, like out to September or so? Not really. But if we have like a rocky summer, at least I'm putting some time premium to the trade. There's just not really a great way to trade this thing. I mean, could I go in the money? Like if I want to no upside risk, 15, 14, 13, 10. Would that be right? Let me see if I can build this out on option strat. Nope. It's only VIXW. That's not even the right ticker. Crap. That's not what I want. So this is, I mean, I could get $100 here. Like this isn't terrible. I could get $100. This might be a little bit better. So I'm 3 wide. Now I get $50. This is $1. I mean, that's going to be no profit. This one is a little bit better. So I'm risking, $240. It's just not a good upside trade. Like I don't get any asymmetry for being long the VIX. But it's cheap. It's like this is a cheap hedge where if VIX goes up, I can get paid on this thing, but it's all the way up to September. So defined risk is just kind of worthless. Yeah. I mean, maybe the 15 by 30. I mean, maybe a 15 by 25 you want to pay. It's like that's not even that big of a benefit. I'd rather go 15 wide, pay, 490. If price goes up on the VIX to 20 or 25, we can probably make a few bucks on this thing. It may not be 100%. It's going to be hard to make 100% of this trade. I mean, again, I think that volatility is coming. If we have a pullback, we're going to see the VIX go up a little bit. Speaking of pulling back, how about this? Did we actually tap 7,600 this morning? 75.99. Good. Fall like the Dickens now. Like fall like crazy. Just because a pullback's coming. We should see our trade. I mean, our daily profit play should be in much better shape now. We shouldn't really have any drawdown. It's going to be, we're up a couple bucks now. So that made it a little bit more tempting. Like, oh, I could have taken the trade for 280, 290 credit. Right. But that was also a, $3,000 risk. So I'm just going to stick with my defense. I'll stick with my credit for $1.30 and hopefully make $1.30 when the day is done. More importantly, honestly, going into next week is if I can make $130 today and somehow that put condor gets me an extra $250 going into Tuesday, or if we get around the 7,600 handle, I might actually increase this closer to $400, and I'll probably just take that. I'll wash the. I might just leave the butterfly on for like a free 70-cent hedge. But if I can turn this into any type of bonus profit for Tuesday, you will actually see me smile on Tuesday. Because coming into Tuesday morning, that's what I want to see. So if we are going to fall coming into Tuesday morning opening bell, This is where my sweet spot is. So if we're hanging out, I mean, what's crazy, if we're hanging out around current prices, I could probably pull in, close to $300. If we're hanging out around 7,600, I could probably pull close to 350. If we're hanging out just above 7,600, again, this is opening bell on Tuesday, my expiration day. There's a little bit more profit potential in here. So that means I've got to survive today, hang out for Monday, and hopefully see the market. I mean, if the market drops, that's fine. I'll just keep the $250. But if we're going to hang out and linger around like 75.80 to 7,600, there's at least a profit trap to watch for Tuesday morning. This is the close of the day. So if we're at 76 to 76.15 ish, well, that trade looks even more appealing. I just don't know where we're going to be. So I'll look at the option chain. I'll look at the expected move. We'll plan out our gamma. We'll take it in stride. But let's see what we get overall for today. So now notice how the gamma profiles changed a little bit. You still have 76, but you're starting to get some more levels like lighting up here. I said 75.50 to 7,600 are going to be probably key levels to watch today. 75.50, right? 7,600, 75.50. Watch those levels. Nice, Jeff. Daily profit play for $1.60. That's good. That's good. J44 on YouTube. That's correct. The cure for high oil prices are higher oil prices. It's very true. What about a butterfly in the VIX? But the butterfly is all timing. When do you get paid on a butterfly? When it's in profit at the end of the day. So what's my butterfly on the VIX? I guess what I could do on the VIX is, I don't know, go to like June or July. This is like, I don't know, we're going back to the VIX conversation. But if I went to, end of June or some part of July through the holidays, if we're like drifting into July 4th over the holidays, things get a little bit lower liquidity, a little bit thinner volume. What does a 15 by 20 by 10 look like? It's a 1-to-1. It's like the whole point of a VIX trade is like, give me, 1,000% upside for like a tiny little defined risk trade. The only trade that I can get right now that even seems remotely justified is just buying a call, which I hate doing. So I'm really surprised that last year when we got that synthetic trade, it was like a max risk of $300 with unlimited upside. Like, I cannot get that trade right now. So, I guess I can. I can buy a call, sell a put for no premium, and I just buy the call. So for $400, I can say, all right, I'm synthetically long the VIX. And if VIX goes up, these values shift and go in my favor. But what I'm looking at expiration wise is, okay, if I went to, August 19th, do I think we're going to have some type of pullback and turbulence between then? Possibly. So the goal, if I take this trade, would be, okay, if I buy the 15, maybe 16 by, like, this isn't bad. This isn't bad. So I can hold synthetic and I can buy the call at 16, sell the put at 16. If this debit is under $5, it's like, okay, for $500, and yes, it says the max risk here is 2,100 because it's assuming that the 16 is going to zero. But the true trade really is, I'm risking, $488 on my debit. If the VIX continues to go lower, I'm going to be down a couple $100 more. Okay. But if the VIX goes up to 20, then there's no cap to my upside. And so if we have a quick run where the VIX is up 30%, I might see this, this $5. Nice. I might see this. I might see a $5 debit that becomes, $7, $8, $9 of profit. And that trade is okay. Sorry, my chair is on its final legs here. It's time for new office chair. So do I like this trade? We do a lot of crash insurance plays that are, about $500. I'm willing to spend $500 to make hopefully no capped upside. I just don't know how good this trade is going to be because the VIX for the most part has been super, super suppressed and super compressed. So even if the VIX has a huge rally, I mean, what we could be hopeful for is we get some stupid VIX event, right? I mean, that would be a great hedge, is just be long the VIX. And if the market, falls 5 or 10% out of nowhere and this thing rips up to 40, 50, 60, like that'd be a fantastic trade. So is it a good hedge? I mean, if we see the spike up into the high 20s and maybe 30s again, yes. If it comes into a ridiculous, oh my God, the VIX just went up to 35 or 50, great. But what would be more frustrating would be the VIX just keeps going lower and lower and lower and lower and lower. And then I take on the risk of my long call and I take on the risk of another $2 or $3 to the downside, which is not the end of the world. I maybe take on about a $700 or $800 max risk. But that's the August 19th VIX if I did synthetic long. Iron Condor for double ups. Tom, tell me where an Iron Condor is going to offer higher reward than risk. Because it's not. So it's not a double up trade when you're taking on more risk than reward. Daily profit play. Yeah, man, do whatever you want. Go ham on Iron Condors. So anyway, I'm gonna put a pin in this. I might come back to this notion that I could get long the VIX here for about $4.90. It's okay. The play here is if I'm doing this trade, I'm waiting for a pullback, expecting a pullback, looking for price to get beat up a little bit, and I want to see if the VIX will actually spike up to like 20, 25, or 30. One thing, and it's like we don't know. It's like what is keeping this market pumping right now? The fact that we have like $3 or $4 trillion of IPOs coming in the next like 60 days, 90 days. You're seeing that like OpenAI and Anthropic are leapfrogging each other for who has a better valuation. SpaceX is probably going to be a $1 trillion valuation. I mean, these IPOs are massive, and the market's like, we can't let this stuff fall. Like it is so pumped up and stable right now that the threat is that if we think whatever got us here, whatever fast cycle quant move got us here with all these crazy option flows, the craziest part is how ugly it can get on the way down. I mean, it's all fun and games when it's parabolic to the upside and everyone's loving this run, but it's nightmares when it comes to volatility that retreats and takes the stuff back. So this is just a matter of like if and when, but I don't want to position for this. So I mean, if we have this happening, being long the VIX is not a bad trade. Like being long the VIX is a good hedge. But if it's like a spike in the VIX that goes from 15 to 30 and then it pulls back, it's like the VIX goes from 30 back down to 20. It's like you got to be quick on those profits. So anyway. I mean, this is even cheaper. If I want to do like a pretty cheap hedge, it's like, do I think we get above 17? I mean, we're at 15 to change right now. Like that cost me $400. This is around the money, $500. So like it's a pretty cheap hedge. I'm going to take it. I'm going to take this trade for three. Let me see if I get 385 debit. So 385 debit. I'm going to hedge with a long VIX. Try 390. All right. Ask price is 395. I'm going to try to get a little bit under the ask. All right. Just got filled for 391. So crash insurance, it's been a while since we had some love in that class because we don't have to hedge very often when the markets are clearly up. So I'm going to do a synthetic long here. So this is a crash. So I'm synthetic long the VIX with a 17 sell put and a 17 buy call for 391 debit. This is going to have to go out through one-click trading. Crash insurance, new trade. Going out to the 9/19 AM expiration. selling the 17 call, buy the 17 call for a $3.91 debit. This is a synthetic long VIX play, looking for the underlying VIX to show a rally above 20 to 25 to 30 area and look to protect the trade for profit. So basically we have a VIX event. Oh, you're right. Yep. 819. You're right. Edit. That's an 819. Thank you. No, it's down here. Look at the I know this activity stuff sometimes is annoying. Look at down here. I sold the 17 put, I bought the 17 call. Look at the highlights. It's correct. The activity one is incorrect. It populated it wrong. This is a sell put at 17 and a buy call at 17. Yep. All right. So it's been a minute, but let's see what happens there. I will probably look to see, if the VIX goes up to 20, 25, let's take a look at the trade, right? 25 VIX, 30 VIX. Let's take a look at that trade. Maybe grab a couple $100. I'm not looking at a crazy hedge, but expecting the, ninth week in a row, we have all sorts of, the market could literally pull back to 74, to 74, 73 and still be a positive week to make 9 in a row. So, in a way for the day, this is actually kind of encouraging that we might be giving back a little bit today. Do I think we're coming all the way back down to this, this close? This is the close from yesterday at 7563. There's a gap up there. If we go to the weekly candle, this is SPX. The weekly candle from last week. We could like fall like crazy today. We probably won't. But the close last week was 7473, and we could still have technically 9 weeks in a row. So let's see what the rest of the day looks like. I might actually, so that I did like a put spread here. I don't think I'm going to keep that, or I'm going to move it lower. Working orders. Let's see here. Where's my... I'm looking at the all puts that I was putting on earlier. Did I keep that trade or did I cancel that trade? Let me look at the strikes. Yeah, I put them all right here. 75.10. Where's that trade at? There it is. Okay, so that put spread combo is trading for about 80 cents. Let's go wild here. That way I'm not taking stupid risk. I'll risk $500 to make $25. If we hang out above 7,500 for the day, that's a nice winner. I doubt that's going to get filled. But I just don't want to let some, lingering trade that's risking $3,000 just sit out there for the day. So I'll tighten that up a little bit. All right. So right now, daily profit looking a lot better. Right now, my put condor for Tuesday looking a little bit better. So instead of taking like the $1,700 risk, I'm only down a couple $100. I do have that butterfly defense as well. This gets more interesting coming into Tuesday morning. Okay. All right. Okay, 1 second here. Let me look at the SPY. $7.55. Okay, give me one sec. So this would be looking at price to, yeah, I mean, I'm going to have the team dive into Flashpoint for the SPY numbers. I'm looking at this. So SPX and XSP are fine, but look at how far off the SPY is. So the SPY is trading at 755, and this is showing the Flashpoint trigger 698. That is not correct math. So I'm going to have the team look at like what's my algo doing on the SPY calculation. Now, granted, I've taught the class like I'm rarely going to trade the SPY. Unless I want to do like bonus strategy, which is active repair. So I'm going to focus for the defined risk trade. I'm going to trade SPX or XSP only. Okay. But I'm going to get the team to look into this really quickly because that does not make any sense why that SPY is so far off. All right. So still pending orders, SPX, XSP, that's fine. SPY, we're falling back to 65 now, gap filling. Good. This is why I did bear call spreads. Let's see what our gamma level looks like now. 7550, 7600. Notice how it's changing. Expect a move from the static measurements this morning. Did we get to 76, 10 to 15 today? Nope. Did we react off of 7600? We hit a high of 75.99. So was it a reactionary level today? Yes, and nicely so. Markets up to fresh highs on the day. Markets up to fresh highs for the week. We're going to have 9 consecutive weeks up. That's great. But it's nice to see that intraday, and for us for the week, it's like, I want this thing to fall a ton, right? Fall to 75.50. Fall to 75.50, break through that. I mean, we'll see what happens. This market could also do this too. We have a open, we rally up, we fall back to 50, and we come right back up. Like we could just be sideways for today. But if we give some of this back and we kind of line up that, likely correction coming into next week, then yeah, bring it on. I hope we freaking correct. And all that for a little $250 winner at 76.25. Catherine, yeah, I just typed in VIX. I mean, if you want to take that VIX trade with me for crash insurance, I just went to VIX. So type in VIX. It's not futures. It's just the CBOE volatility index. I can trade it directly from here. So VIX is the ticker. It's the volatility index. I went out to August and I bought the 17 call. I sold the 17 put, and that synthetic, I got in for 391 filled. So I just went straight to the VIX. So that will sit in my platform now for a while. And I just want to see, if this 391 debit, I mean, realistically, it's like, I'd like to say I can close this thing for over $10. I mean, I'd like to try to make $700 to $1,000 on this hedge. And it's kind of my look. So I'll just kind of spot check it. If we have a pullback in the markets, VIX jumps up to 20, 25, or 30, I'll probably spot check this and see where it's at. So Andrew says probably need to update one click then. VIX. So can you explain how the VIX trade wins? Sure. Well, here I'll just show you. So here is the analysis. Here's how the trade wins. So right now, the VIX is at 15 and change. Use a yellow line here. We're at we're at 15.68. So how's this trade win? If the VIX goes up to 21 or 22, so let's just say, what's the number I want to see on this? I mean, this is basically a throwaway trade. If the VIX does not go up, I'm not going to make money. Does that make sense? If the VIX does not go up, I will not make money. It is that simple. So what I want to see happen is if we were at 25 VIX or 30 VIX, you can see that my synthetic will start to pay. So what I will be spot checking on this trade is if we have a 25 VIX or 30 VIX, then let's see what my profit is. So right now, this is showing that maybe we can make from a 391 debit, we can be up maybe $400. There's a 100% gain. If we go up to a 30 VIX, all of a sudden I'm up $900. That's more than a 200% gain. I'm happy with that. Now, in real time, I don't know if it's going to be that aggressive. Like this is taking me all the way to expiration. That's why I want to build it out on like a modeling diagram, like an option strat or option omega. I just don't, because I want to be able to drag the time bar with this. Because obviously, if I'm going out, 100 days or whatever the expiration is, 82 days out into August, I mean, there's time in the trade. Time is my friend when it comes to, if we get early direction, I still have time left in the trade, so that should be good. But I mean, it's this is the hard part. Is like basically it's bottom line. I need VIX to go up, and so the level I'd be looking at would be if it goes to 25 or 30. I'm interested in taking some profit. How does the VIX go from a? I mean, we had a 35 VIX, right? This year, our high was about 35 on the VIX. So there's our crazy dispersion trade. Market's down 10+%. VIX is way up here, way up. It looks ridiculous on the 50-minute chart, but let's go to the 4-hour. There. So this is what 2026 felt like. Elevated VIX, higher lows, higher highs, higher lows, higher highs. Spikes up here towards 35. From this 35 VIX, we have retreated 56%. Like that's a pretty substantial VIX crush. If we look at what happens here, ridiculous outlier event, and it drops 70+%, proceeds to go all the way down where we drop almost 80%. Like that's the nature of the reversion of the VIX. So all I'm looking for is some type of VIX rally, probably somewhere into here. Like I said, 25 is great to spot check, 30 is great to spot check. Best thing I can do is set an alarm, right? Set an alarm at 25. Okay. Set an alarm at 30 and just see if we have like unleashed the Kraken of VIX, which I don't think the market's really going to do. But I'm trying to give myself enough time to say if I sit on this trade for the next 30 to 60 days and the market rips to the upside or I should say the VIX rips to the upside, just give me a chance to get out of the trade with a couple dollars profit. I'd love to see an early VIX rip to 30. That'd be great because we'll probably, make 150 to 200% profit. But it's just a trade. I think at this level, is the VIX going to go lower, lower, lower? Well, if VIX goes lower, that means the equities market goes higher. I think we're due for a pullback, due for a pause, due for hesitation in the market, and we'll see what happens. This also could just churn sideways, and there's nothing. So that's why, calculate a risk. So if we get a massive spike, yeah, most likely I'll do that. If we get a massive spike in the VIX, that's why I'm going to set, 25 to 30 VIX. If we hit those levels, I'll spot check my price for profit. I mean, will I kick myself if we rip up here to like 30? If we go to 30 VIX and I take profit and all of a sudden we go to like 50 VIX, yeah, I'll super kick myself because roughly a $390 risk here that could pay up to like $2,000 or better. It's like this could be a ridiculous trade. But this, you have to remember, a 50 plus VIX is an outlier move. Like you're probably talking less than a 5% chance that happens. So it's not the probability, right? I'd rather just play in this wheelhouse of, we have elevated VIX and the market can be sensitive. I just don't know what turns the corner. right? Could it be, Kevin Warsh's first press conference when he talks about we're going to reduce the balance sheet and the market's like, oh no. And the market, all of a sudden gives Kevin Warsh a nice little 10% drawdown to test him as a new Fed chair. Could be the possibility. Could it be that oil stays sticky around $80 bid? Sure. And we go back from 80 to 100. Market doesn't like it? Sure. Could Iran US have more, noise in the next 30 to 60 days? Of course. Could we go take some other country? Hey, we did Venezuela. We're talking Cuba. We're talking Greenland. I mean, what's on Trump's agenda? I have no idea. Maybe we're going after somewhere else that nobody sees coming. So we'll see. Anyway, I'm just looking at the possibility the market pulls back a little bit. So we're at 7576. A little bit of a daily candle showing some indecision. Again, you're getting some end of month volatility. I think the probability of prices staying below 7,600 seems pretty realistic today, which is a good sign for us with our daily profit play. Hopefully that's a nice safe $1.30. On top of that, if price comes all the way back up to get to these levels, well, I've got defense up there that makes me feel a little bit better versus just watching the markets inch up higher, higher, higher. If the market's going higher, 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 that's annoying for the day. But now that we go up and down, I mean, we could have the market come right back up to the highs and maybe kiss 7,600 again and then fall back down. And it's just going to be a big range day. What I'd like to see over the day's close is it possible for the day to close, back near this low? If it closes back near this low, this makes me feel a little bit more comfortable for my trade going into Monday and Tuesday, that my 7, 6, kind of 25 zone where my break even is 76.27. If we're trading down to like 75.60, it's going to be harder to get to that level by Tuesday. But if we're trading up to 7,600 going into Tuesday, obviously that's more gettable. So, that little in the money put condor could be a pretty interesting trade to watch. And it could also fail. I could freaking, lose $1,700 on the trade. But hopefully I don't. All right. What else you want to take a look at? Somebody was talking about Cisco. Time to talk about the thong song. Here's Cisco. Here's daily. I mean, another one that's kind of rewarded for this, whatever this all in everything AI is. Cisco, since the lows in March, it's up 63%. This was the poster child for the dot-com bubble because it's taken essentially 20 some years to get back to these highs. That's the scary part. This is the dot-com peak, right? 2000 to literally 2026. I mean, that would be the most annoying drawdown ever. But if anybody had the courage to buy Cisco at dirt cheap levels, it stayed in business. And now this thing is, up 600%. But I mean, what trader is going to sit on this thing unless you work for the company for 20 years? What trader is going to sit on this thing for 20 years? Not a single trader. Jerome Powell speaking on Monday. Well, his words carry some weight. What's he doing on Monday? I mean, he's a shadow Fed right now. Man, that looks like a hairpiece, huh? Nice try, Nick Cage. So what's Monday? Is he on the calendar? I mean, do you think Iran's going to play ball? Probably not. It's just noise. It's all noise. Go to Monday. Is he on the calendar? Nope. I mean, if he's speaking, what's he doing? Where's he at? He's not even on the calendar. So we'll see. PMI numbers coming out on Monday as well at 10 a.m. Tuesday, anything next week? Fed, bond auction, ADP numbers, services PMI. We should just have Friday. We'll probably just have the ADP numbers and non-farm numbers. Yep. So we'll have job numbers on Friday. Yeah. I mean, I don't know. I would say if he's speaking on Monday, I don't know what he's doing. It's probably some fireside chat or some basic. It's not even on the calendar. Yeah, I get it, Pete. And that was, I mean, I saw it too. I mean, I'm benefiting from a little bit more of the world push. I mean, the one country that's kicking butt right now, besides the U.S., which is a nice thing to see, obviously, but the world. I mean, here's VT. So South Korea is crushing it this year. There were some good head starts to non-U.S. trades. Like Europe started off pretty well. I saw some recent highs in Brazil, Latin America. Korea was killing it. Vietnam was killing it. I'm trading some Africa. Like, I mean, some of that commodity based economy stuff has been doing pretty well. I'm benefiting from being long the VT, which is just the global market. And so that way, if the world does okay and the US does great, or the US does okay and the world does great, this should still be pushing higher. So this is one of my preferred instruments as far as getting long these last couple of years with, US stock market at these crazy high valuations. What else can I trade to diversify? This only has about 40% exposure to the US, which is still enough to help thrust this thing higher. But South Korea has been one of the biggest catch-up trades the last year. And I'm trying to think what their EWK, that's Belgium, EWZ, South Korea, EWY. Look at this thing on a weekly chart. This is a country, by the way, and it looks like all of our semiconductor chips or all of our semiconductor stocks. Look at what happened here when we were talking end of last year. End of last year into early 2026, South Korea is up 73%. This is an ETF, right? Could you imagine the S&P ripping up 70% in 3-4 months? And then we had this violent pullback, and it was like, oh, it's told you it's overbought. Look, it's just low to high pullback. It pulled back 23%, but it was a dip, and the market's up another 78% on top of that. It's practically symmetry, right? It's up, it's down, it's up. Why is it up so bad? Or why is it up so much? Samsung. It's really driven by two semiconductor companies. And so, the amount of, and their currency is at like multi-decade lows against the US dollar. But the growth they've seen here has been just astronomical. So is it kind of like all in? Yeah. South Korea probably hinges on the success of AI. If there are bottlenecks, there's a ton of volatility coming here. And that's the other big unknown is like we want this AI build to be like it's the greatest thing ever, but the reality of it is most likely to be really messy. If we are, going to space and we're building out data centers and we're driving the consumer into the dirt where the affordability crisis in the K-shaped economy gets worse and more exaggerated, at some point that reality will have to be recognized by the markets. It's just not right now. Yeah. So it is primarily all Samsung driven, yes. But Samsung right now is killing it. So is South Korea. But anyway, look, these are all good problems to have. Like you're talking when you're in a bull market, it is first world problems. It's when the markets maybe have enough persistence in the bad side of things that things roll over and it's like, this is not what we thought. This is way worse. Oh my gosh. And then the ability for this market to give up gains after you look at a stock like this, right? This is what we need to be prepared for. This is the scary stuff. When you look at a stock or a country ETF or anything that looks like this, it usually does not end well. So could Dell go to, $1,000 before we have a crazy pullback? Yeah. But I will just make this final reference. Like this is my biggest concern for everything we're staring at right now that looks like it's going to the moon. This is what my fear is that all this is jump on board, ride the bandwagon, enjoy the money train while it's here. Because if it ends up going, and if there's a negative side that the market jumps on board with, and it just flushes this stuff back down, this is what every chip stock could look like in the next 5 years, right? If we have bottlenecks, if we have whatever, if we have people, the U.S., we're stupid enough in the U.S. that we would just, light a data center on fire and cost companies billions of dollars, right? So that's my concern is that at some point, maybe this is what happens. But let's hope it's somehow, soothing the concerns of like, look, there's a place for humans to coexist with the incessant build out for AI. And if we can coexist and have more jobs created and we can have this real productive boom, then yeah, I think it's going to be great for the stock market. So it's not something I want to fade when there's like literally tens of trillions of dollars being built into this stuff. It's like, why do you fade that? I don't mind picking a top here and there for a defined risk trade. That's very different than me being a super permanent bear. I think I would be insane to fade this move. So, we pick our battles. So when I'm prepping, intraday, it's like just because I wanted to be bearish today on bear call spreads does not mean I'm a bear. It's just like I just played the game of probability is we were inefficient yesterday. I think we're a little overstretched. We're going into a likely pullback. So do we start that today? Do we give back a little bit today? Maybe. Do we give back a little bit on Monday, Tuesday? Maybe. We will see. So anyway, my bet is a non-telegraphed worst Fed hike. I mean, do you think that's how he wants to start his tenure? I mean, if the Fed reduces the balance sheet and they do a surprise rate hike and catch the president off guard, again, I'm all for Fed independence, but the markets aren't ready for a rate hike unless it's going to be somewhere like late this year or early next year. That's when the market's pricing it in. If this is a surprise hike right out of the gate from Warsh, that's a huge surprise. There's easily a catalyst for the market to sell off a decent amount. Tightening, shrinking the balance sheet, raising rates, even though I think it's necessary. If we don't put the inflation genie back in the bottle with sticky oil prices, I mean, we can't just keep saying we're going to grow our way through this. It's like, look, nobody wants to do this. Here's what happens. When we have, hey, the stock market is up. Hey, here's inflation. Here's everyone's wages, right? This has been the biggest gap that most people are pissed about for the last 6 years. Inflation versus wages, right? Has the market outpaced it? We'll just put SPY here. Yes. If you're in the market, you own assets, you have made more money than what inflation has been on a, annualized basis. But this is what the consumer is struggling with. Our wages are not outpacing inflation. Our ability to move and climb the socioeconomic ladder has changed the last 6 to 12 months, where we have a no hire, no fire labor market. So if the industries are going to create more jobs, great. But that's not happening right now. Our jobs are in basically services, healthcare, government. That's it. Private sector's been cutting like crazy. Tech has been cutting like crazy. Tech is doing so well right now because it's all about margins, right? But this is the K-shaped economy. So at some point, this is where people are going to vote. People vote with their pocketbooks. People vote with their wallets and their earnings. If they can't feel like they can stay ahead of stuff, because this, if inflation keeps staying sticky and we have some type of weird food inflation later this year, you're going to break so many more consumers. And people will vote on that. And that's the only way they feel like they have a voice is, this sucks. I hate where I'm at. Things are not better for me. So I'm going to vote the opposite way. It's just the reality. And that pendulum swings very far left to right. But it's like, that's midterms. That's out to November. So what does it look like from now until then? I don't know. Maybe more upside. Maybe because if Trump can brag about how awesome the stock market is, and then everyone that complains is just poor people, right? Nobody wants to listen to him anyway. It's just sad. It's like, but everyone's just like, just invest. That's why we did the Trump accounts. That's why you can invest. It's like, yeah, for now. But if the market has a 20, 30, 40, 50% correction ever in the next 10 years, I don't care if you start every kid out with $1,000. They're going to have to ride the thing out for 20, 30, 40, 50 years. If you have a lost decade of we hit these highs at 40 plus earnings on a Cape-Shiller ratio, 40 times earnings, and it would give back 10 years of gains, like that's not fun for anybody. So it's just about survival. So anyway, the point is I don't know. And nobody else does either. So all the YouTube noise, all the Twitter noise, all the newsletter noise, guess what gets you to click on it? All the scary stuff. The reality is we're sitting here staring at the market today and it's moved a couple of points. Can we control our risk and can we come in and grind out a couple of points today? Can we make a few dollars today? My hope is yes. And we do that way more consistently, right? And if I can survive it in a day-to-day basis or week-to-week basis and just make sure I'm risk defined, I'll be okay. So, all right, let's see what happens for the remainder of the day. We've got a little pinch point encore from yesterday to show. Somebody's asking about Walmart. I mean, I have a Walmart ratio spread running right now. Walmart. So I think I put on a couple more trades here. So I have a I've got a few ratio spreads. Ratio spread 85 by 80, and then I did the is this 100 by 95? Let me see what else I have here. So I did a ratio spread with naked puts. Yeah, so I've got a couple trades in here. This is all Project Options Edge. Ratio, oops, plus NPs. So I'm looking at, if I take ownership of Walmart, I'm going to own the shares around $75, around $78 here. So, I'd own a couple of shares of Walmart at 78 bucks. I'd say that's a decent correction. Trend wise, I mean, we're sitting right at a pretty key spot here. I'd like to think that we head up. I mean, what's interesting is this narrative is like Walmart's now an AI stock. Well, now it's not. Now it looks like a consumer stock. I mean, they just had earnings as well. So, I mean, we just peaked out. We grabbed a couple of bucks there on our calendar spread. But now we've been down, 20, 30 bucks, which is not a huge drawdown. I mean, it's manageable. I guess point is now is like, do we go up from here? It's down 15%. I mean, I'd look left on the chart and see this is $105. I went all the way down here to 80, and that's where I'm playing my Walmart for, about 500 bucks an account. It's like, as long as we stay above $80, I'll make some money. That gives me about a 40% cushion. Right. So I have a 40% cushion before I take on really any risk on Walmart. So I think I'm okay. But in the near term, if we, bottom out here for a short term bounce at all this support, I mean, you can see the technical moving averages there might offer support. All right. Let's see. Head to situation room now. Make a final decision. I ran. Heads up. Stay tuned for the announcement later. Blah blah blah. Yeah, we'll see. I mean, everything on Iran is noise. It's clearly the market is liking like de-escalation. Some type of resolution. The market's liking it. It popped on it yesterday. Do we pop on it again today, or is it it's kind of cooked in, and we'll see what the market does. So let's do this. I'm going to take one spot check on Gamma, and then Deanna, let's fire up a little pinch point scanner. We just had a winner close out today on SMCI, which is nice. We're still looking at Gamma kind of hanging out around that 7,600 pin price. That would have been, that was, well, I suppose my double up trade, I missed it. That would have been a nice little, to look at the butterfly at 76 when price was down to 63. That would have been a pretty good trade because now we'd be showing some profit. I mean, it's not too late, but it just seems like now I'm overpaying for it. This is a much better trade. Pull back to the level, try to head back up. Let me see what a 7,600 looks like right now. I just don't know if it's going to stay at 76 for the day, right? I mean, that's the hard part is if I put in a trade now, does it stay here for the day? I don't know. But if it actually gets to 7,600, let me see what it looks like. $7,600. If I just do a call fly, 20 here, it's going to be pretty pricey. If I went 15 wide, try that. Yeah, I mean it's 350 bucks. If we get to 7,600, there's probably $50 to $100 of profit on that trade, which is not terrible. that trade would have been much better if we were. I'll just do the math. So from 63, which is where the intraday low was, that was our pullback right here. From 63 intraday low, let's say that I go 20 points higher. So that trade, interesting. That's still showing like a 355 debit. I thought it'd be a little bit better priced. Anyway, I feel like I missed the opportunity for double ups. If we wanted to still play that 7,600, you do it from the lows, and that would be going back up into profit now. So I don't know. It's a hard one. My hope for the day is that we just stay below 76.20 and we have defense there if we need it between 15 and 20 and 25, which certainly helps. But I would like to see price stay below 76.20 for the day. If we just chop around here, stay here near the highs. I mean, if we break the lows at 70, 75, 60, then we're probably looking at that start of a little pullback. I mean, it's technically needed. So let's see what happens. So there's SPX Gamma. Let's go SPY. I mean, we're right in the thick of it. So what's interesting is look at the SPY pin. Right now, the SPY pin's around 755. So I mean that could drag. I mean, and again, I put more of the option trading and more of my speculations on SPX. So I don't use the SPY to necessarily say, oh, the SPX can go down. But I'm looking at this pin price is making it pretty interesting to see. We're at a pretty decent head start. This is almost double the volume on SPY at 755. So XSP is the mini version, and it's going to be right back towards 760 again. And then you got SPX, which is around 7,600, but you have the SPY at 75.55. So, nothing outlierish, but it's like, well, I could see us maybe coming back up to test, maybe testing 760 SPY and then settling back down around 756 or 755, if that proves to be accurate. So I think if I was playing 7,600 today on the SPX, I would be managing profit and not trying to hold and pin it all day. So just thoughts. All right, Deanna, let's go and grab the screen, do a little pinch point scan or pinch point encore. This was a live session for yesterday, so check it out. Let's see where the day closes. Let's see if price will stay below our daily profit level. Keep an eye on those updates. Nice winner on pinch point. Check it out here. Really nice to find pinch point trades because we set them up. I also put in 3 fresh trades this week on pinch point as well. Double ups just didn't look very clean today. Engineered options, I was playing defense only. I'm gonna do the same thing next week as well. I just think we'll have a pullback, so I'll play defense on engineered options next week. Flashpoint, not a single pain trade this week. The market literally went nowhere on Tuesday, Wednesday, went up on Thursday, and up again today. There's just no pain point the market's experiencing. So we just keep stick to the process. I did the numbers this week, posted for Member Telegram and One Click Trading. We're getting filled on Flashpoint trades about 20% of the time. So for every 5 days we're trading and putting in pending orders, we're getting filled on really one spot, one trade. But that one trade is winning close to like 75 to 80% of the time. That's why we take the trades. Okay. All right, let's play some pinch point. Good prezo, and check it out. And I will send some updates throughout the day. All right, thanks.